off. Americans return to space as Discovery clears the tower.
TTMTrades, welcome back. Today we're going to be doing the end of month review on the small account challenge as I get everything set up here. So I know I said I'll go more over my trade journal at the end of the month. I didn't want to go over it every week at the end of the week because it was taking some time. And then, of course, getting a month's worth of trade data will kind of give us a better understanding of where we stand as far as the trading system and how I'm trading. So this is going to be the end of month review for February. All right, and we're going to go over our trade statistics and where we stand. So again, remember, we're doing a small account challenge. We started off with $590 and we're going to work our way up to 100 grand utilizing my personal trading system using the double Bollinger Band trading strategy. So let's jump right into it. So as you can see, we're up a little over 4,012% on the account. We started off with $590 for the month of February, and right now we're sitting at $24,264.44. So it's been a real good month. The markets, although the markets have been bleeding due to the whole COVID-19 virus and pretty much dropping at a high rate, the SPY and the Dow, so on and so forth. Again, we're trading options, so either way with options that allow you to play either side of the market, whether it's up, down, and or moving sideways. That's what's so great about options. If you know all the different strategies and how to utilize them, you can make money in the market regardless of how it's moving. So we've been able to profit nice this month. So let's just jump right into it. Total gain for the month of February, we made $25,624.96. And then for the total loss for the month, we lost $1,950.52. So again, that leaves our profit loss factor at $23,674.44 for a total gain of $24,264.44. Okay. Some of the top three profit loss plays was the Apple 250 put. We made $18,035 on that play. The Facebook 212.5 put, we made $3,027 on that one, along with the Apple 290 put, another $2,088. And then some of the ones we took losses on, as you can see, I was struggling with Beyond, trying to catch that wave this month because a lot of my big losses came from ticker BYND. So again, the Beyond 134 call, lost $1,456. And then the Beyond 120 call, I lost $307. And then the MMK 550 call, I lost $105. So for the most part, pretty good. Okay, our profit loss ratio is definitely well over where it needs to be. So again, our overall summary, our distribution of our gains and our losses. Majority of our trades, remember I told you my risk factor. Okay, just for one R, I wanted to only risk starting off. I said 6% of my account as far as trading, and then I bumped that down to 3%. So I said if we take any losses, we wanted to keep it right here in that -2 to 6% range right here. And out of those 5 losses I took, only 1 loss stayed down in that range. Okay, as you can see, we had a 10 to 12% loss, and then we had 3 losses that was well over 20%. Okay, but it didn't really hurt that much just due to the position size and we had in those losses. Really didn't damage the account that much, except for one particular loss where I did take a 69% loss. And that one kind of set me back pretty big for the month. But we'll get into that one here pretty soon. My overall trade statistics. As far as my trades, 9 winning trades, 5 losing trades for a 64.3% win rate with a 35.7% loss rate. My profit factor is 13.14. What a profit factor is how much money you make versus how much money you lose. Okay, so normally a good profit factor is 2 to 3, right? You normally want to make 2 to 3 times as much as you typically lose on a trade. Okay, anything over a 3 sometimes is unheard of. So my profit factor is sitting at a 13. Okay, so I make 13 times the amount of money I typically lose on my trade. So I got a pretty good profit factor. My profit loss, 7.3 to 1 on average per trade. I'm making about $2,847, and then average per loss, I'm losing about $300. Okay, So I'm making well over 7 times the amount, as you can see here. Profit rate is an 87.9% profit rate, with a loss rate of 12.1%, with an expectancy average of $1,691 per trade. Okay. So for this month, for February, as you can see, it's February 29th, leap year. Again, the total for the month, $23,674. My equity curve, as you can see here, when we first started off with that 590, kind of had the little jump up. This is why I took that 69% hit on my account, pulling it way back down, and then finally the equity curve continuing upwards. This week's performance, 23,521. I made a lot of my money this week due to the market dropping at such a high rate of speed. My maximum drawdown, that 66% loss I took, and then the drawdown on the longest losing streak was a 22% loss. My longest losing streak, I took 2 losses in a row, and then my longest winning streak, which I'm currently on, is 4 wins in a row. So we kind of getting in a groove and a rhythm of the market, and kind of timing the ebbs and flows of the market a little bit better. Okay. Our expectancy based off my R multiple of -3%. Again, remember, 1 R is 3% for me. So my average R multiple expectancy per trade is a 21 R. Okay. Adjusted per my risk to reward ratio is a 9.07. Now my required win rate to break even. Okay, so what this is saying is, based off the amount of money I'm making per trade, I would only need a trading system to where I only win 16.56% of the time. Okay, so based off how much money I'm making per trade, I can have a trading system where I'm only winning 16% of the time and still break even. Okay, so with that being said, I can have a trading strategy where I'm winning 16% of the time and I'm losing 84% of the time based off how much money I'm making per trade. Okay. And then the required win rate for a 2 profit factor per trade, again, that'll be double the break even, which is at 33.12%. Okay. And then the planned risk to reward ratio is 6.07. Now, trade analytics, statistics, some of the things we talked about already here. Win trades 9, lost trades, losing trades 5 of them, average profit, so on and so forth. My largest profit in one trade was $18,035.04, and then my largest loss I took, which was that 69% hit, was $1,456, as you can see here. My average win based on R is about a 36.72, and then my average loss is a 7R. Average win 167% gain, and then my average loss is about a 31% hit, which I need to bring that down a little bit more. We need to get that down to 10%, and we'll talk about that here soon, going into the profit target sheet that we'll go over next. Risk to reward ratios, all of that, you can take a look at that. Okay. A trade evaluation, again, this is my emotional curve. When I make a trade, what made me enter and or exit said trade based on the setup, and that's a point system here. And then my emotions as I go into those trades. So as you can see here, a lot of my trades I was satisfied with, and then just a few of them I was kind of pissed off with the way I entered them, as you can see here. And then I tried to anticipate one, and I was irritated on a couple of them. And then greed did play a large part into my earlier trading into the month, because I had such a small account and I was trying to swing for home runs. And even when my trades were in profit, instead of me locking that profit in, I was trying to go for more profit, and then the market would turn against me and I would take a loss on the account. So greed did play a part early on into the trading, once I got started on a small account. My trade setups right here, as you can see, the ones that I did utilize this go round and the ones that were very profitable were call on a strong uptrend. As you can see, that one had a 66% win rate, which gave me about a 3.38 edge. I played calls on a weak uptrend. That was an 80% win rate with about a 3.56 edge. And then did puts on a weak uptrend. And then, as you can see here, calls on a weak downtrend. That one was about a 40% win rate, and that gave me a 4.47 edge also. Okay, but the puts on a weak uptrend is what really gave me the edge and helped me make a lot of money this trading session. All right, so we'll go over and look at the stock positions. Here go all my winning trades to the left, all my losing trades to the right, as you can see here, which we talked about. Okay. And again, that 69% hit early on in my account, being that beyond 134 call. Now my trade log, where I log every single one of my trades, as you can see, we started trading on February 5th, again with that $590. And then some of my trades, as you can see here, made $478 my first trade. That was 113% gain. And then took a $90 hit to the account, which wasn't nothing big. $216 hit, and then came behind 684. Lost 105, made 231, lost 83. So far I was doing good. I was making 2 to 3 times the amount I was losing. Made $134, $576 in this trade right here. I think my account was right at 2,200 to 2,300, and this was the trade that I took, not keeping option expirations in mind and the PDT rule in mind. And I took a 69% hit to the account, losing $1,456. And that took the account, once I got it up to $2,300, it dropped it all the way back down to $727. So I literally had to work my way back out of that hole due to that big of a loss that I had took. Okay. Once I acknowledged that loss, I knew exactly what I did to take that loss, and I, corrected it myself. Then that's when I started going on a hot streak. As you can see here, my next trade for a 437% gain was $3,027 made. My next trade was $2,087 made. The Beyond, the ER play, made $372 on that. And then the biggest play was Apple 250 puts, where I made $18,035 on it. So we got a hot streak going after that. Portfolio, as you can see, I don't have any open trades right now. I close out all of my trades going into the weekend. Just due to the uncertainty of how the markets will play out come Monday. Trade review. Once I'm done with all of my trades, I go and review them, the setups, why, what was the reason for me buying and selling, the cause of error, if I lost money in said trade, my signals on why I entered and exited, how I was feeling when I entered and exited that stock, and then I annotate notes off to the side on what I could do better as far as that trade had went. Again, no dividends, because we're not investing in any stocks that are paying out dividends, so this will never be filled out. Bank transfer, as you can see, I made my initial deposit on February 3rd for $590. And again, we won't be depositing any further money into the account and or withdrawing any other money until we reach that 100,000 mark. So again, you'll only see that $590 deposit. And then the monthly report here for the month of February as we move into the month of March come Monday. So as you can see, the month of February started off with $590 as the beginning capital. Profited, we made $25,624.96 for the month. Lost that $1,950.52. Again, bringing that end capital to $24,264.44. Okay. Taxes and fees, again, Fidelity, E-Trade charges me 50 cents per trade. So just based off commission, I paid out $98.06 in taxes and fees for, and then overall my profit loss is a little over 4,012% for the month, which is unheard of. That's crazy. And then the total profit, again, $23,674.44. My average multiple return was a 21R. Again, remember, R is for me 3%. R stands for risk, right? How much I want to risk per trade at most is 3%. Okay, so my average multiple was 21R, 21 times that. Okay, so that's about a 63% average per trade. We made 14 trades. The average win was 167% gain. My average loss was a 31% loss, which we need to bring that back down to that 3% arena, but we will be adjusting that one here again, because 31% average loss again, and that doesn't take into my position size. And again, on some of those losses, those 20 to 30% hits, I had a very small position size in those trades. So yes, it was a 20 to 30% loss on the trade, but overall on my account as a whole, it didn't affect it. It's probably like a 4% to 5% hit on the total account due to my position size. Win rate 64.3%, and then I have an edge of a 7.3 in the market. Okay, so again, February was a great month. All right, I want to go over the profit target sheet. So again, this was the plan of how we was going to play each and every trade going into it. Okay, and this is kind of like our roadmap, working our way to 100,000, right? Because you want to be able to visually see where you're going, so that way you can work towards that objective. So again, we started off with that $590, and we wanted to do 100% position size in every trade. And yeah, that's risky, going in with 100% position size. And what I mean by that is, if you have $590 and you go into a trade 100%, that means you're going into the trade with your whole account, right? So if that trade goes against you, then you're blowing up your whole entire account, right? So we knew we was going to take on more risk going into it early on, and then as the account built, we was going to lessen the risk that we played into the market. So starting off 100% position size, we was going to put a 3% stop loss on each trade. And I'm horrible with using stop losses. I'm not a mechanical trader. There's two type of traders. You have mechanical traders and discretionary traders, where it's kind of like art over science and science over art, where a mechanical trader, as soon as they enter the trade, they put the stop losses in, everything, and then they just let the trade play out and they go from there. Where a discretionary trader is more of a art over science. Hey, this is where I want my stop loss to be. I'm gonna watch for it, and then if it hits that area, depending on how the setup is looking, I'll get out the trade, right? So I'm more of a discretionary trader, art over science type of trader. So we did take some hits that were way over the 3% expectancy, which we were putting in. But again, the plan going in was a 3% stop loss, the total loss it would take on that account, and then the total risk. And then we wanted to go for a 10 times the amount that we were going to lose. The plan was to gain that on each trade, right? Because based on my setup, I average, again, anywhere from 30 to 100% on my trade. So that was the plan going in, all right? We worked our way all the way up to that $24,000 range, okay? So literally, we took 14 trades, and we wasn't supposed to hit that $23,000 to $24,000 mark until 16 trades. So 2 less trades, we got to our target a lot quicker in 14 trades. So what we'll do is we'll take this and we'll highlight it all the way up to that 23,000 where we're sitting at. We'll come over here and put X's showing that we hit all our targets, and we'll just go ahead and put this down as we work our way to that 100,000 mark. All right, so let me fix this because I'm a neat freak, so that's kind of bothering me. All right, there we go. Put X here. All right, so there we go. So now moving forward, right, as you can see here, the position size is going to change. I'm not going to play 100% of my account. I'm not going to utilize the whole $24,000 to trade with, because again, if a trade goes against me, then I can blow up that 24,000 just like that. So what we're going to do now, per our plan, is we're going to go in with a 50% position size. We're only going to utilize half our account now, okay? And with that being said, what that does for us is it helps us manage the risk of blowing up the account a lot better, okay? So yes, we're sitting at 24,000. What we're going to do now is we're going to cut our position size in half. We're only going to use a 50% position size on the account. And going forward, this will allow us now to take instead of a 3% stop loss, now we can utilize a 6% stop loss, because what we're doing essentially is, now that we're only using a 50% position size of the total account, we can take on more risk, right? At all times, I only want to take a 3% loss to my total account, okay, at all times. So with that being said, as we cut the position size in half, we can take on more risk. So now I'm able to take on, instead of a 3% stop loss, I could put a 6% stop loss on my 50% position size, and then again, my total risk on the account will still only be 3%. All right, and we're gonna keep it like that until we get all the way up to 40,000. All right, once we get to 40,000, again, our position sizing will change again. Once we get up to that 40,000 range, we'll drop our position size from 50% down to 25%. Right, once we drop the position size down to 25% of the total account as we position ourselves, then we can take on more risk. Now we can take on 12% risk of that position size, and again, that's still only a 3% total risk to our account. Okay. Now, regardless with me going in with a 50% position size or a 25% position size, that size of the account is still at risk, right? I could go in with a 50% position size and then the market goes sideways and it totally destroys that whole position, right? So that position is still at risk, okay? Um, but everything going according to plan. We manage our stop loss, we manage our position size, and we should be good, right? What we want to look for is longevity, right? Once you make the money, the objective is to preserve the money and then continue to grow it, all right? And we do that through good position size management and good risk management, okay? The name of the game is to protect your account for the longevity of trading, okay? So that's just where we're sitting at now. So moving forward, we'll only take 50% position size, like I said, until we get to 40,000. Okay. A lot of the plays, as you can see here in the Discord, we called out. In the Discord, I post all my plays in my small account challenge room. Here's a picture of my equity curve in my account. Okay. As you can see here, net account value $24,255, 53-cent E-Trade, and then as you can see here, 2020. I didn't start trading in February, and then you can see my equity curve spike up, pull back, and then spike up again. Okay, so that's my actual account. I took a screenshot of that on yesterday at 10:23 a.m. just to show everyone. So a lot of love in the Discord when I posted that. And then again, here's all my plays I post. Bought an open Apple 250 put at 238. You know, sell to close 250 put at 238 for 990. So on and so forth, and I post all my plays in here so everybody can follow them. Okay, so that's where we stand with the account. Moving forward into March, we're not going to trade with the whole 24 grand. We'll cut that in half. I never want to trade with a $20,000 position. So as you can see, each time the account, the dollar, as the account grows and the dollar amount goes up, as we hit, you know, that 23,000, and I'm about to start trading with 20 grand or more, I cut my position size back down to that 10 to 20,000 range to trade with, as you can see here. So that's the size that I'm trading with. Once I get to 20 grand, I cut my position size back down to where I'm only using 11 to 19 grand to trade with. Once I hit that 20 grand again, I cut the position size back down to 12%. That brings me back down to 10 or 11 grand to trade with, right? So what I'm doing is every time my sizing is having me trade with 20,000 or more, I cut down my position size and back down to 10 grand to trade with. All right, so that's all we're pretty much doing. Yeah, so monthly report, we killed February real good moving forward. Now, what I wanted to talk about was moving into the month of March and the ticker SPY, with the overall index, the S&P 500, what I think is going to happen. Okay, I know we had this short-term rally on the end of the day going into Friday, where you see this large volume spike in the price action running up. All right. And a lot of people was asking me, do I think the market is going to rally? And my answer to that is no, right? One, we have to know why the market rallied like this towards the end of the day, and that's mainly due to the tech sector. All right. So if we go here and we do a sector summary, right? These are the 11 sectors of the S&P 500, and then we go end of day, right? As we can see, end of day, every sector was still struggling towards the end of the day, Friday. The one sector that did a rally was the technology sector. So if we click on that sector, we can see that within the sector, the software and semiconductors within the technology sector is what rallied towards the end of the day, right? So if we click semiconductors, then that pulls up all the stocks that rallied at the end of the day. And what I'm going to do is I'm going to click on one or two of them. And if we go and look at LASR, right, it had that end of day rally, but look at the setup, right? The setup is still bad. It's still in the downtrend. So there's nothing to stop these stocks that were within the tech sector that had an end of day rally to push the S&P 500 up like that towards the end of the day from continuing on this downtrend, right? So let's take a LASR. If I go here to look at MPTN, again, end of the day rally where it spiked up, but the setup is still overall bad and in the downtrend. So going into Monday, I don't think the market is going to necessarily rally back up. I'm I'm still playing puts on the market. As far as this COVID-19 virus, there isn't anything that's really justified it being cured, or no company has come out with any kind of medication or anything like that to kind of fight this thing. So there's still a growing number of cases, and a lot of countries have labeled it an epidemic within their country. But now the World Health Organization is talking about labeling it a pandemic, right? A worldwide issue. So if that happens, then the market is going to go into further frenzy. Okay, so just looking at the setup intraday, and we'll work our way all the way out to the weekly and monthly chart, and then we'll close out this video and be done. Again, I always tell my Discord community, anytime the price action is below its 150 SMA, which represents the higher time frames middle Bollinger Band, if you watched a lot of my videos in the past, and it's pushing outside those bands, then overall it's not good, right? So if we look at the 5-minute chart, we're still below the 150 SMA, which means the overall intraday trend is still bearish. We haven't broken above that, right? And then that 150 SMA represents the higher time frame middle Bollinger Band. So we zoom out to the 30-minute chart, 298.06 will represents the middle Bollinger Band on the 30-minute chart, sitting at 299, right? About $1 off, give or take. But now on the 30-minute chart, you see we're still in a downtrend, and we haven't even rallied, one, to break above the middle Bollinger Band, and two, to rally to break above its 150 SMA, sitting at 325, right? So the overall trend in the 5-minute chart, 30-minute chart, still bearish, right? We zoom out, that 150 SMA that's sitting at 325 is the middle Bollinger Band for the 2-hour chart, which is kind of sitting at 218. So it's about $7 off, give or take, right? But you see, look at the 2-hour chart, it's still in a very strong downtrend. Hasn't broken above its one standard deviation Bollinger Band, or its middle Bollinger Band, or its 150 SMA, which is a daily chart middle Bollinger Band, sitting at 327, right? So we go out to the daily, middle BB sitting at 327, still on a very strong downtrend. Yeah, you got the end of the day buying power, but we just identified that buying power was due to the tech sector, right? Why the SPY had that end of the day a rally like that. And then just looking at the tech sector and some of those stocks that just rally like that, they're still in a very bad setup to which they can reverse going into next week and pull this further down. All right. So again, if the price action is breaking out of the Bollinger Bands, you always want to go to the next higher time frame to see where your support and resistances is at. So again, 150 SMA are broke below that, which is the weekly's middle Bollinger Band. That's sitting at 307.49. So we zoom out to the weekly, and now we see we're still within the bands, and now we have support and resistance to work with, right? So looking at the weekly, as I was telling them, the community on my Discord, I said the biggest thing I wanted to pay attention to was that 293 area. All right, I said 293 is a key support level on the weekly charts. So this is a new area. We want to watch today on the SPY. So if the market closes above it, then that means one of two things next week. The market will consolidate all next week above said area, moving up and down day to day, or it will reverse pending the COVID-19 news. Okay. So with that being said, we said that first thing in the morning at 7:26 a.m. Watch the market play out all day. It dipped down to that mid 287 range, but immediately the price action pulled back and closed at 296, right above that 293 area that we were identifying that morning, right? So some buying came into play and it held it above that 293 area. Now, just on a day-to-day basis, we're still in the overall downtrend on a day-to-day basis, right? So we might have a little short-term rally, but it's going to take a lot for this on a day-to-day time frame for this to build a bottom and come out of a downtrend. So there's still a lot of work to do with the potential of this breaking through that 293 area next week and then pushing down to that 277, down to the 270 range, which is the monthly's chart middle Bollinger Band as we zoom out to the monthly here, which is holding steady. All right. And that possibility is real. There's still a lot of room for this to pull down from that 296 range to 277 and 270. So we just want to keep those areas in mind going into next week. I'm still very bearish on the market, and I'm still going to play puts going into next week. All right. So TTMTrades, that's my account. Again, we're up over 4,000%, and we're sitting at 24,000 on the account, starting off with $590. So again, you want to see the plays, join the Discord. Till next time, if this is your first time, subscribe to the channel. TTM Trades, I'm out. Peace.
Houston, Tranquility Base here. The Eagle has landed.